and welcome to my channel, where I analyze the latest trends and news in the financial sector. In today's video, I'm going to explain why the US regional banks are failing and what it means for the economy and consumers. I will also talk about what happens if the US regional banks start failing one after another. How can regional banks survive? Which regional banks are doing well? But before we get into the US regional bank failures, please make sure to hit the like button, subscribe to my channel, and turn on the notification bell so you don't miss any of my future videos. Regional banks are smaller than national banks and serve specific geographic areas or niche markets. They have been struggling for years due to low interest rates, increased competition, regulatory burdens, and technological disruption. But the pandemic has made things worse, as many of their customers have defaulted on loans or closed their businesses. As a result, regional banks have seen their profits shrink, their credit ratings downgrade, and their stock prices plummet. Some of them have even merged with other banks or been acquired by larger ones. This has implications for the banking industry as a whole, as well as for the communities and customers that rely on regional banks for their financial needs. In this video, I will explore these implications in more detail and give you my opinion on what the future holds for regional banks. So stay tuned and don't forget to like, share, and subscribe for more content like this. So, why the US regional banks are failing? There are different reasons why regional banks are failing, but one common factor is the massive outflow of deposits that they have experienced in the past few months. Many regional banks specialize in serving niche markets such as wealthy individuals, venture capital firms, or small businesses. These customers have been withdrawing their money from regional banks and moving it to safer or more profitable alternatives, such as online banks, fintech platforms, or large national banks. This has created a liquidity crunch for regional banks, which rely on deposits to fund their lending and other activities. Some regional banks have also suffered from credit losses, higher expenses, and lower margins due to the economic downturn and rising interest rates. These factors have eroded their capital buffers and made them more vulnerable to regulatory intervention. What happens if the US regional banks start falling one after another? If the US regional banks start falling one after another, it could have serious consequences for the financial system and the economy. Some of the possible impacts are: number one, loss of confidence in the banking sector, leading to more deposit outflows, stock sell-offs, and credit rating downgrades. This could create a vicious cycle of more bank failures and more panic. Number two, disruption of credit markets and reduced lending to businesses and consumers, especially in the niche segments that regional banks serve. This could hamper the economic recovery and cause more defaults and bankruptcies. Number three, increased burden on the regulators and the Deposit Insurance Fund, which may not have enough resources to handle multiple large bank failures. This could raise the risk of a systemic crisis or bailout by the government. How can regional banks survive? Regional banks face many challenges in the current environment, but they can also adapt and innovate to survive and thrive. Some possible ways to regional banks to do so are: strengthening their capital and liquidity positions by raising equity, issuing debt, selling assets, or cutting costs. These can help them withstand potential shocks and meet regulatory requirements. Number two, improving their customer experience and loyalty by offering personalized, convenient, and digital services that meet the needs and preferences of their target segments. This can help them retain and attract customers and increase their revenue. Number three, leveraging their competitive advantages such as local knowledge, community ties, niche expertise, or customer relationships. These can help them differentiate themselves from larger or online competitors and create value for their customers. Number four, investing in technology and innovation by modernizing their core systems, adopting cloud solutions, partnering with fintechs, or exploring new business models. These can help them enhance their efficiency, agility, scalability, and security. Which regional banks are doing well? There is no definitive answer to which regional banks are doing well, as different sources may use different criteria and metrics to rank them. However, I'm going to give you a list of some of the regional banks that have been recognized for their performance in 2023. Chiba Bank, a Japanese regional bank that had a total return of 37.83% as of April 14, 2023. Central Bank of Kansas City, a US regional bank that had $376.7 million in assets at the end of 2022, up 21.2% from 2021. Starling Bank, a UK online bank that won Britain's Best Bank from 2018 until 2023 and Best Current Account Provider from 2018 until 2022. KeyBank, a US regional bank that has no monthly checking fees, an excellent Power rating, and a wide range of services offered. That's all from me today. I hope you enjoyed this video and learned something new. If you did, please like, share, comment, and subscribe to our channel for more videos like this one. Thank you for watching and see you next time.